All right, everyone. Bismillahirrahmanirrahim. Assalamu alaikum, everyone. My name is Yasir Yamin, and I welcome you all in this session. As already discussed, now how we are going to do this session is that we are going to see a particular question that was originally published by Kaplan in their mock examinations. A few attempts back. It is a very good question, a full 25 marker question, a question that you should expect in section B of your exam. This session is going to be about debrief of this question. We are going to debunk this question, find out relevant points here, see how we can score marks in an examination. And then I'm going to allow you to write answers of these questions and send me the answers, and I'm going to check them from you. This is how we are going to go about it. So it's very important that you start drafting your answers before the real exam. Because now if you make mistakes, those can be corrected. If you're not good with answering a question, you can still improve it. If you lack somewhere, you can still cover it up. But if you do those mistakes in your exam, then unfortunately your examination attempt could go wrong, and nobody wants that, right? So we are going to make this effort right now and make sure that we are spot on as per the examination's requirement. So this is again a 25 marker question, guys. And how this question works is that there are three parts to this question. So the one extract is about vessels, the other extract is about double, and the third extract is about employee benefits. So three particular areas, or at the very least, three accounting standards are going to be tested in this particular question. Now, what I've done is I have just posted down the requirement of each and every exhibit with the exhibit itself, so that it's easier for us to debunk each and every part in isolation. In an examination, you will be getting a complete single pager question, and then you need to answer the three requirements that examiner has mentioned. Altogether, cumulatively, these are 25 marks. All right. So let's just start attempting it. My expectation is that while I'm reading the question or while we are discussing the question, you would be, courageous enough to post your comments or post whatever you find relevant on the chat box, so that we can write it down and we can make sure that we understand, everybody should understand whatever is given in the question. All right. And at the same time, we need to make sure that we do not take a lot of time in it. All right. So let's just go about it. Examiner says GLAZE is a company that prepares its financial statements in accordance with international financial reporting standards. So they follow IFRS. It is currently preparing financial statements for the year ended 31st March 20x8. So 31st March 20x8 is your year end, and obviously 1st April 20x7 would be your year start. This is how you just read a question. Now, one of the first exhibits that has been given in front of you is about vessels. Examiner says, one of the GLAZE's ordinary activities is to provide services to the oil and gas industries. So one major business that you have is that you provide services to the oil and gas industry. So all oil and gas companies are your customers, right? It owns a number of vessels that are rented out to customers and which are correctly classified as property, plant, and equipment. So you have vessels you can call, I believe these are cargo ships or whatever. These are vessels that you have. These are your property, plant, and equipment. So you use these vessels in the longer run. Why do you use them? How do you use them? You use these vessels to provide services to the oil and gas customers that you have. Examiner says, at the start of the current period, the directors of GLAZE noticed that its contract with customers were becoming more shorter in duration, and that contract tendering was becoming more competitive. So the scenario basically is that previously oil and gas customers that you have only had a few options in terms of suppliers. So you were one of the suppliers of vessels to oil and gas customers. There was very less competition. So generally people wanted to book a longer contract with you. And I would certainly request Muzammil, please do not interrupt with silly questions. Please. It does not help. All right. So again, there was very less competition and very less number of suppliers within the industry. So what your oil and gas customers used to do was they used to book extended contractual terms with you so that you have a longer business. Yeah. And then there was less competition within this specific area, provision of vessel services to oil and gas customers. So likewise, there was no price competition as per se. So examiner is saying in those times, it was therefore deemed appropriate to change the depreciation policy for its vessels to one based on the number of days of usage. So your company decided to depreciate the vessels, which are items of your property, plant, and equipment, based on usage method. Yeah, based on usage method. Now you need to know there are at least 3 types of methods that have been mentioned under IAS 16 as depreciation methods, acceptable as examples of depreciation methods. 2 of the more famous depreciation methods that you have always listened all your life are straight line method and reducing balance method. But some companies also use usage method as part of their depreciation policy. Yeah. But in order to use this particular method, the company needs to very much categorically and precisely assess that what is the maximum capacity a particular item of an asset can be used for, and how you are going to determine that usage. So some companies use usage method in terms of the usage hours or the machine hours. Yeah. Other companies can, you say some airline companies can use the flying hours basis in order to calculate their depreciation, because the airplanes that they have life in terms of flying hours. There are legal limits, of how much a particular aircraft can fly. For example, an aircraft which has already flown 50,000 hours or maybe 100,000 hours cannot fly anymore or on long haul services. And then those type of aircrafts are given to countries like Pakistan and we still fly. We don't care. We always say Allah Malik hai. God is great. God will save us. There are countries like us. But likewise, there are international standards, how much aircrafts can fly, a particular aircraft can fly or not. So for these type of companies or these type of industries, usage method might be relevant. And therefore, it was deemed appropriate to change the depreciation policy for its vessels based on number of days of usage. Now, it's very important for you to understand why the company is saying that we want to change our accounting policy or depreciation policy. They want to change their depreciation policy not because there is a change in the pattern of usage of the vessel. They are just saying that, you see, nowadays, many of our vessels are idle. Why they are idle? Because there is more competition nowadays, and people, there is more fierce competition. There are many suppliers available. So many of our oil and gas customers often choose our competitors for services rather than us. So many a times our vessels are idle, and that is why it's better to adopt the usage method rather than the straight line method or the reducing balance method. And let's continue reading the question. As a result, straight line depreciation over the useful life of the asset is charged in periods of operation, but if the vessel is not in active use, then no depreciation is charged. What's the fundamental point of the question? Company is saying, and I can write it down for you just to break it up. Company is saying that depreciation should be charged on usage basis, but we still follow straight line method. However, in times of no usage or when the asset is idle, no depreciation is to be charged. no depreciation is to be charged. This is what your examiner or the company or your client is actually saying. Examiner says the directors justify this on the grounds that the economic benefits of the inactive vessels are not being consumed. So since there are no economic benefits coming out of an inactive vessel, therefore no depreciation should be charged as well. Matching concept, they are trying to teach us matching concept. So you charge depreciation because you are using the assets. Since technically you are getting the economic benefits out of the asset, you must charge a corresponding expense, and that is why you book depreciation. Since the asset is idle, you should not be charging depreciation. That is what the client or your customer is saying. Some vessels can remain inactive for many years, although money is spent maintaining them during this period. Your directors are saying many a times it happens that assets are not being used for many years because there is competition. We do not have enough business now. Yeah. But still, don't worry, don't worry. No depreciation should be charged during that time, but because we are maintaining the asset. Since we are maintaining the asset, there is no case of wear and tear or obsolescence. This is the case they are trying to make up. Examiner goes on to say, in GLAZE's industry, regulatory changes can require significant modifications to the vessels. The directors require advice as to whether this new depreciation policy is in accordance with IAS 16 property, plant and equipment. You need to advise whether the vessel depreciation policy is in accordance with IAS 16 property, plant and equipment, and you would be awarded 8 marks for it. Now, first of all, I need a clear-cut answer. Do you think the proposal that has been given by the company, is this in line with IAS 16, yes or no? I want an answer from everybody. Please, no, I don't want answers from few people, from everybody. Very nice. So, you see, while it's true that IAS 16 proposes that depreciation should be charged because economic benefits are being derived from the asset, and the depreciation should match those economic benefits in the relevant period, so that matching concept is fruitful. But according to IAS 16, depreciation of an asset commences. Depreciation charging of an asset commences when the asset is available. When the asset is available in the intended, in the condition which was intended by the management. And then even if sometimes the asset is not being used, still the depreciation must be charged. Still the depreciation must be charged. However, if the proper usage method was being used, not straight line method based on number of years, no. If proper usage method was being used, let's say based on machine hours or flying hours or vessel hours, and that is often determined by the industry practice, if that method was being used, then in those circumstances it is possible that depreciation is not charged during the inactive period, but then the entity needs to continuously assess if the remaining useful life or the depreciation method is appropriate or not. Now, in this particular question, examiner is saying the vessel can remain inactive for many years. Even if the usage method was being used, if your asset is not being used for a lot of years, you cannot stop depreciation because your asset will ultimately wear or tear. And you guys understand, you see, vessel is made up of steel. It will get rust and dust. It will be subject to obsolescence. And even examiner mentions this fact that the regulatory changes happen often, and due to that significant modifications are required, and those routine maintenance won't help you. So can the entity decide on this particular policy that they were talking about? The answer is no. The answer is no. Agreed, everyone. And now let's start making some points. I would gladly appreciate if you guys can just feed me up some points, and this particular handout will ultimately help you towards the end. Yeah. Another point, sir, can you explain why did you say depreciation will still be charged when it's not available for use? You see, Mamta, I'm not saying the asset is not available for use. Mamta, please try to understand. The asset is available for use. The asset is available for use, but is not being used because you don't have business. The asset is idle. The asset, these vessels are in the condition which was intended by the management. They are not being used because there is not enough business. And that is why we say the depreciation should still be charged. And there is an economic rationale behind it, because there will be wear and tear, because there is evidence to suggest that there will be regulatory changes and that can cause obsolescence. Right? Do you get my point, Mamta? Sir, we are using units of production method on mold while producing empty bottles for Pepsi, Coke, and Coca-Cola. Idle asset 2%. Very nice example. Rana, very good. Very nice contribution towards the class. So Rana is saying that we are actually positively following this approach. Yeah. So practical experience does help. I'm not pointing out anyone, but yes, practical experience does help. All right. So let us just let's jot down some points. All right. At the end of the day, we need to draft a very good answer in order to gain marks. So altogether, these are 8 marks. So ideally, if we get good 8 points, we'll be able to sail it through. So I want 8 points. And that includes the introduction of IE 16 as well. All right. So give me 8 points, please. So I would say according to IAS 16, yeah, an entity should recognize depreciation in order to match economic benefits from the asset. Is that true? Right? For this, IAS 16 accepts well-known methods like SLM, RBM, and usage methods. IAS 16 suggests that depreciation corresponds. Now, these are 3 points here that I've written, okay? I-16 says that depreciation corresponds to the physical and economical wear and tear of the asset during use. So depreciation actually represents the physical and economic wear and tear that happens to an asset when you are using it, right? So wear and tear of the asset when used, right? Now, any other point regarding IAS 16 in particular? According to IAS 16, when is depreciation commenced? IAS 16, depreciation starts when? Please tell me, starts when? When the asset is in the condition as intended by the management, right? This is the first point. And one more point, IAS 16 also provides what? That depreciation is still charged when the asset is available for use. So a lot of point on what IAS 16 says. But again, if you want to gain good 8 marks, you need to make sure that you apply the teachings of IAS 16 within the context of the question as well. So, the proposal of directors, do you think the proposals of director is correct? Proposal of director, not correct? Not in line with IAS 16? Yeah. Then you need to explain that depreciation will continue to be charged. Depreciation will continue to be charged even if the asset is idle for years. Yeah. Any other point that we can make here? You need to justify this positioning. You see, your ultimate outcome is that you're negating the proposal that has been given by the directors of the company, and that you're saying that according to IAS 16, you should still be charging depreciation even if the asset is not being used for a number of years. Then you need to justify this position as well. Yeah. So you need to justify this position by adding that You see, there is an economic rationale behind it. You need to prove to the examiner that whatever accounting standard says, there is an economic rationale behind it. You need to talk about wear and tear. Yeah, you need to talk about wear and tear. Plus, you need to talk about regulatory changes. This was mentioned into the question. You need to bring this regulatory changes word within your answer. If you do not pick this regulatory changes word from the question, most likely examiner will not give you application marks. Yeah, so there are regulatory changes within the within the industry, and so therefore obsolescence could arise. This is one area. You can also make a point regarding maintenance. You can say that maintenance may not be enough, and because since when regulatory changes come, ultimately you would require significant modification to the vessel in order to keep on using them. Yeah, so you can include these points. So Mariam, did I answer your question? These assets will go obsolete, maybe due to regulatory changes, or maybe since they are not being used for so many years, there will be physical wear and tear, and so there is an economic rationale to keep on charging depreciation. All right. The question, Hira has actually asked a very good point, and she's asking, sir, can we link this with change in accounting estimates? Hira, you see, there are two types of questions when you go in SBR exam. Sometimes examiner does not specify which accounting standard you particularly need to refer. So, for example, if the requirement was that examiner just wants you to explain the directors what should be done in above scenario, maybe in that case you could have included IAS 8 as well and gained 2-3 marks from IAS 8 and like the remaining 4-5 marks from IAS 16. Absolutely good. But in this particular case, I would suggest that since examiner has specifically pointed out and the directors are specifically asking you one question, that is this policy in line with IAS 16 or not, I suggest that you stick to IAS 16. Maybe if you feel that you are not getting 8 marks because you don't have valid 8 points, maybe you can add 1 point for, or maybe 2 points for IAS 8, just to be on the safe side. When your examiner checks, maybe he might give you marks for IAS 8 as well. But as far the strategy is concerned, the official strategy is concerned, since examiner clearly pointed out the requirements is specifically to IAS 16, better stick to IAS 16. And I think there is much to say when you even stick to IAS 16. Make sense, Sarah? All right. Is this good for everybody? Now, I want a simple question to be answered. Now, can you write a decent answer? Can you draft a decent answer once I give you this as a test? Are these points or the discussion that we have enough? Farooq, changes in depreciation policy is never an accounting policy change. It's always an accounting estimate change. So you cannot talk about accounting policy. Depreciation in itself is an estimate, right? So if you change the depreciation pattern, the only way that you can change your depreciation method is because now you estimate that the asset's consumption is not based on life or based on something else. Otherwise, you cannot change. All right. So I would expect that once we are done with this session, you write a very good answer, and I won't give you much time. The mock examination or the test area would be locked. Please make sure that you write it. Just try to draft an answer. Maybe the first time you won't be good, the next time you won't be good, but the third, fourth time you will get better. All right. So take this as practice. Let's go to the next part. And again, we have taken a lot of time here. We don't want to spend a lot of time in the in the upcoming areas. All right, guys. The next part, double. Examiner says on the reporting date, which is 31st March. Remember, right? 31st March 20X8 was the reporting date. So the examiner says on the reporting date, which is the last day of the accounting year, GLAZE purchased all of the share capital of double. So our company's name is GLAZE. We purchased 100% of the share capital of double. Let me ask you a question. If you buy 100% shares of another entity, will you get control? Will you get control? Yeah, so obviously the control is with you. This is one point that you will obviously mention within your answer. All right, the control is automatically established. So on the reporting date, GLAZE purchased all of the share capital of Double, an entity that used to develop computer games. So Double is one company that develops. What do they develop? They develop computer games. Very noble thing that they are doing, contributing positively to the world. Huh? Examiner says Double's assets comprises trademarks, computer equipment, and a building. So I'm just trying to, just break down this particular question. They have assets. When you acquired them, you see that they have assets within their business, and there are three types of assets. They have some trademarks, obviously, trademarks to the game. They have some computer equipment. Obviously, they will be doing some computer coding on that. Yeah. And they have a building within their assets. Nothing else. Examiner says the fair value of each of these assets is relatively similar. Double has not developed any new computer games for over a year. And mashallah, they have no employees. Please note this down. They have no employees. Examiner is saying the directors of GLAZE are unsure if the purchase of Double's share capital should be accounted for using the acquisition method. They wish to apply optional concentration test as outlined under IFRS 3 business combinations, and you need to advise the purchase of the share capital of Double should be accounted for using the acquisition method or not. Do you guys remember the optional concentration test? Yes or no? Give me a yes or a no. Do you guys remember or not? A bit. So basically what happens is, generally whenever a company like GLAZE, when it acquires a company like Double, generally when you acquire a company, you have to account for this transaction under IFRS 3. And according to IFRS 3, whenever business combination happens, you have to follow the acquisition method accounting. Now, how this acquisition method accounting goes is that you recognize fair value of the acquired entity and then you consolidate it within yourself. You combine that company within yourself in the consolidated financial statements. Now, IFRS 3 did highlight that whenever you are accounting for an acquisition as a business combination, first you need to clarify or identify or define if the company that you have acquired is really a business or not. Not every business acquisition is a business combination. Not every acquisition of a company is a business combination. Do you guys remember? There were three things under IFRS 3 that must be present in order to call a company a business. Three characteristics should be present that will justify if an entity is a business or if it's an asset acquisition. Do you remember those three things? Excellent, guys. How do you recognize, how do you identify if the entity that you have acquired is actually a business? Now, a business is defined as a set of collective values, a set of collective things. And what things? There must be some inputs, and then there must be some processes that, when applied to those inputs, should have the ability to create outputs. Now, these three things, if you remember correctly, these three things make up a business. And if you see that these three things are not present in a particular entity that you have acquired, then the entity that you have acquired is not a business, and therefore it's not accounted for as a business combination. Rather, it is accounted for as an asset acquisition. Do you recall all this stuff? I mean, this was the handout that we studied. So under IFRS 3, a business is basically defined as follows. A business consists of inputs and processes that, when applied to those inputs, have the ability to create outputs. Your investment can either be classified as a business combination or it can be classified as an asset acquisition. Now, what are inputs? Inputs, for example, are non-current assets like intangible assets or leased non-current assets or intellectual property, etc., etc. What do you mean by processes? For processes to be there must be a strategic management process or an optional process or some resource management or some employees being present or some technical resources being present. That will justify that there are processes that are being applied to the non-current assets that you have. Yeah. And when you apply those processes to these inputs, your business is an entity that has the ability to create output. And remember, when we discussed this lecture, I told you that output is not something which is mandatory. Even if the entity is not currently producing output, but has the ability to produce output in future, even then it is acceptable that this is a business and the transaction would be accounted for as a business combination. Do you guys remember or not? There must be input, processes, and output. And how do you actually know? How do you actually know if you really need to apply this business assessment or not? You see, what you need to do. If in any transaction, guys, please listen to me. If in any transaction you see that substantially all of the fair value is concentrated in one assets or in similar type of assets, then you need to apply the optional concentration test. For example, let's just see the physical application, the practical application of this. Right now, GLAZE has acquired Double. And you see the entire value of the Double would be dependent on three types of assets. However, these three types of assets are not single asset. You see, the criteria for IFRS 3 is that it would be an asset acquisition if the entire fair value of the entity is concentrated under one asset. Now, do you have one asset or multiple type of assets? In this case, there are multiple assets. So IFRS 3 basically says, please check. Is the fair value of the entire entity concentrated in one single asset or maybe in multiple assets, but of the similar sort? For example, 5 cars, 5 buildings, 5 machineries. Are these similar type of assets? In the case of Double, do you have different classes of assets or same class of various assets? You have various classes of assets. So Double has various classes of assets available. So technically, the fair value of the acquired entity, is not concentrated in a single asset or similar assets. Agreed? Is your optional concentration test complete? Yes, you have tested. The fair value of the entire entity is not concentrated on a single asset or similar type of assets. The answer is no. If the fair value of the entire entity was concentrated in a single asset, then it would have been asset acquisition straight away. But in this case, the first optional concentration test is not met. Then examiner wants you to assess, are there any outputs or are there any processes that are critical to producing output? Please check, are there any processes? Guys, please help me out. Definitely, Double has not developed any computer games over the year and has no employees. So basically, they have not generated any computer games over the year. So there is no current output. There is no current output. But having output, is this a mandatory condition in IFRS 3 or an optional condition under IFRS 3? Please tell me. Current outputs are not required. Current outputs are not required. You need to mention this in your answer. However, under IFRS 3, current outputs, and remember, current outputs are not mandatory. You see, there must be three things in order to classify an entity as a business: input, processes, and outputs. Output is not there, but it's not mandatory. We need to find two things at the very least: inputs and processes. Now, input means that you are putting something into the business, like non-current assets, intangible assets, inventory, and so on and so forth. Is there input available? Is there input available? Input is available. In terms of investment in non-current asset, input is available. Do you see any processes? Examiner said there are no employees in the company. There are no employees in the company. Since there are no employees in the company, can there be some strategic processes or operational processes? I mean, there are no employees in the company. There is no one sitting and coding and making computer games. How will there be future output? There can be no future output. There can be no future output. So you can critically say that in the absence of employees, it can be critically concluded that no such processes like game development or market assessment are being applied to trademarks or computer equipment that future output is possible from double. So technically speaking, there are no processes being involved. If there are no employees in the company, there are no game developers in the company, there is no market assessment in the company, can double in itself, just focus on this company, can double in itself create output in the future? No. It is when GLAZE will acquire double, it will start to put in employees of its own and then try to create some output. So double itself, when you acquired double, you actually acquired trademarks, computer, and buildings, nothing else. The computer gamers and the market development, this will have to be, put by GLAZE itself. So you are only acquiring assets. You're not acquiring a company. You're not acquiring a business. This is not a business combination. This is an asset acquisition, and that is what you need to justify to your examiner. Is it clear to everybody? Now, believe you me, so somebody asked me towards the, starting of this session, sir, can I, skip some lectures? I mean, you always have the option to skip some lectures, but then these type of requirements come. And now anybody who has at least one time studied the optional concentration test lecture or the business combination lecture would have easily attempted this requirement. Maybe at that point in time, you don't exactly what IFRS used to say, but at least you would have remembered input, processes, and output. These three words. Even if you had remembered these three words, input, processes, and output, you could have drafted an answer from your own opinion, and that would have been correct, and you would have gained at least majority marks out of this 8. And these majority marks, like 5 marks or 6 marks, will eventually help you pass this paper. And that is why I recommend that you try to complete all the lectures within time. All right. There is a question. Sir, in application step of drafting, we are required to prove our conclusion in accordance with IFRS, or we can give some arguments even if it is not proving the conclusion. Where you feel that there is something in the scenario which is vague and that you cannot reach towards a conclusion, you can obviously comment to the contrary. that if we see this transaction from this POV, there might be a different application altogether. Yeah, so you can be critical in your answer where you cannot find a conclusion. And there have been questions in the past like this where you were supposed to answer in both ways. So I suppose for us that thing is actually answered. Yeah. Is everybody clear with this? Now, my expectation is that we have critically discussed this question and now you would be drafting answers by yourself. Yeah, I would really want to see your answers. If I get the opportunity to correct them, it is much better than examiner correcting your answer. Because see, if I correct your answer or maybe I guide you something, most likely, even if I scold you, you might feel bad. But if your examiner does the same, you will feel very bad. So I am the better option, right? So please do that. Sir, you usually suggest that what can be tested in an ongoing attempt. It is too early for me to answer, Abdullah. Yeah, let's move on. I don't think this is the right time to talk about it because whatever I say won't come into your examination. So Abdullah basically is asking, sir, what is your expectation? What will come into our examination paper? And I can assure you from my past practice, my past history, whatever I say will definitely come into the exam, never comes into the exam. Alhamdulillah. Actually, the opposite happens. So if I say that step acquisition will come, held for sale will come. If I say held for sale will come, foreign subsidiary will come. So you can actually never count on my word. I've never been successful. So better not ask. Yeah. So actually, to be very honest, nobody knows what will come into your exam. Nobody knows. We can just play with you by giving you our guess. We have fun. As teachers, we will have fun. But to be very honest, nobody knows what will come into your exam. I can tell you for sure. Yeah, Vakas? So if you follow my advice and then based on my advice, you skip some portion, most likely that skipped portion will come into your attempt. When should one start, Kate? When you're ready. Simple. If you're ready, start doing it. All right. So let's go to the third and the final part. And this is for 9 marks, guys. I certainly expect that you would answer this very quickly. So examiner says on 1st January 20x8, which is just 3 months before the year end, the directors of GLAZE decided to close one of its operating locations. Very bad. They are closing down a particular factory or a particular geographical location. Examiner says due to commitments with key clients, trading will continue from this location until 31st December 20x8. So at least for 1 year, they will continue for this location, at which point any remaining employees will be made redundant. Any remaining employees will be made redundant. So redundancy is coming into play. Do you have anything in your mind? What examiner can ask you here? Excellent. IS 19 is being asked here. Good, Adil. So examiner says termination benefits. On top of the usual salary for any month's worked, GLAZE has informed its 500 affected employees of the following. So your employees have been told the following. Your employees have been told 2 points. The first point, employees will receive a bonus of 5,000 if they remain in employment until 31st December exit, but only $1,000 if they leave before this date. So in total, you have 500 employees. Yeah, you have 500 employees in total. And there are 2 types of employees. Some employees will stay till 31st December 20x8. And some employees will leave before that. All right. So employees that will stay till that point in time will be paid $5,000. And employees who leave before that, for example, employees who leave now, will be paid $1,000. By the way, examiners did say, as at the reporting date, which is 31st March 20x8, as at the reporting date, it is expected that 300 employees will stay until 31st December 20x8. So at least 300 employees will stay till 31st December 20x8. And that automatically means that 200 employees will leave before that for better jobs or for better opportunities, and they will only be given $1,000. Your directors are unsure how to account for the above employee benefits. Can anybody tell me that how should we be accounting for this first point? We are going to discuss the first point now. There is a question in between. Do we need to mention accounting standards number? No. No. But it's better. Will you get any additional marks? Maybe no. But for the sake of professionalism, I would suggest that you write standard numbers. Yeah. But again, you won't get any extra marks for it. Again, how should we be accounting for this transaction? So some employees still work for another 12 months and some employees leave now. The employees that leave now will be given $1,000. The employees that work for the next 12 months will eventually be made redundant, but after 12 months, and they will be paid $5,000. How should we be accounting for this transaction? You don't know? Actually, we have done the exact same question in our class as well, within the lecture. Exact same question. And it's been in the past papers many a times, exact same scenario. Guys, you see, you have 500 employees. First of all, you need to understand that GLAZE has decided that it will be closing down one of its operating location. So technically, all the 500 employees will be made redundant. Some employees will be made redundant now. Some employees will be made redundant afterwards. But it is for sure that all 500 employees will be made redundant. And you know, when the employees are terminated, they are given some termination benefits. But sir, what about those employees who will still work for the next 12 months? Are they not getting any termination benefit? No, they are also getting termination benefit. Can anybody tell me how much termination benefit employees that will stick till 31st December 20x8, how much termination benefit they are getting? They are still getting $1,000 as termination benefits. You see, you need to understand this very clearly, and it's very common sense. Any employee who leaves now will at least get $1,000. Will at least get $1,000. So if an employee stays for the next 12 months and he gets $5,000, how much extra is he getting to work for the next 12 months? How much extra is he getting? He's not getting extra 5,000. He is getting extra 4,000. 1,000 he would have eventually got. 1,000 he would have eventually got. In any case, he would have got 1,000 eventually. Even if he leaves now, he will get 1,000. The extra that he is getting for the services of next 12 months is a short-term employee benefit, and that is 4,000. And that is 4,000. And somebody just mentioned, sir, this is related to PVDBO. No, this has nothing to do with PVDBO. These are not pensions. This is nothing to do with PVDBO right now. We are talking about specifically termination benefits and short-term employee benefits. Some employees will work, some employees won't work, but eventually everybody will be made redundant. So there are two types of implications here. One, you have termination benefits. And these termination benefits will be given to everybody. Everybody means altogether the entire 500 employees. See, you have 500 people, even if they leave now or if they leave afterwards, the minimum amount of money they will eventually get is $1,000. And this money is due to termination. How much is this? This is 500K, right? This is termination benefit. This is termination benefit. And according to IAS 19, termination benefits shall be recognized immediately as soon as when the firm has made a firm offer. You guys remember a firm offer? Such that it can no longer be withdrawn. Remember, it can no longer be withdrawn, or criteria under IS 37 has been met. You need to go with earlier of. So in this particular case, you have already made a firm offer and they have also agreed to it. They have also agreed to it. And since they have also agreed to it, it's a clear-cut provision requirement. It is a clear-cut provision requirement. Termination benefit of 500K shall be provided for immediately. Immediately means that this decision was taken on 1st January 20x8. So this will be done on 1st January 20x8. Is it clear with everybody? I want an answer from everybody. Is it clear for everybody? This is the exact same example that we did in our classroom while doing the lecture. Agreed? By the way, the same example has been given under the book of IFRS as well. And many a times examiner has, implicated the same scenario. I've seen this multiple times. Now, Vakas is requesting for me to repeat. I won't. Vakas, it would be very great and it could save a lot of time for everybody if you can just ask which point you did not understand. It would help us a lot. It would help my throat. I won't have to speak the whole story again. The last one is that you will be recognizing a termination benefit ASAP, P&L debit 500K and provision for termination benefit 500K. This is the accounting entry that you are making. And there is something more to it. There are some short-term employee benefits involved as well. Do you guys agree? Short-term employee benefits? Sir, where did you find out the short-term employee benefits? You see, salary cost of the 12 months is short-term employee benefit. Can you help me calculate how much short-term employee benefit is here? How much short-term employee benefit is involved here? You see, if you remember correctly, 300 employees will continue to work for the next 12 months. So there are 300 employees, right? They will continue to work for the next 12 months and they will be given extra $4,000. And that makes, how much is it? 1.2 million, right? It's 1200, right? Hafsa, I don't think it will be 1.5. So it's 1.2 million. Now this $1.2 million that you're going to pay to your employees, this relates to the next 12 months. So this should be recognized. Over the period. This should be recognized as and when employees have rendered services. Tell me guys, is it clear for everybody? This will be recognized as and when employees have rendered services. So for example, 1.2 million for the next 12 months, if you divide it by 12, this will be 100K per month salary cost being recognized. Is it clear? Is it clear for everybody? And I want an answer from everybody. Please, if you do not understand, you need to speak up, because eventually I am going to ask you to descriptively write an answer for it. Is it clear for everybody? And you know how our class works? Anybody who does not respond, I will just kick that person out of the class. This is the way I'm going to do. So I see many people who are not answering anything. Yes, no. What should I do with them? Maybe they are not attending the class. They have just joined in for the sake of it. What should I do? At least I want to remove one person. I'm just looking at the chat box if previously that person has answered. And I don't find any answer. What should I do? Please don't. And at least one person I'm going to remove, and I've done it. And I am doing it. Voila. At least one person, just for the sake of it. All right. There is a second part to it as well. At least tell me the answer of this one. Employees accrue 1% of the final salary payable each year on retirement for every year worked, but those still employed at 31st December. What is this exactly? Employees accrue 1% of the final salary payable each year on retirement. What is this? Employees actually accrue 1% of their salary each year, and these will accrue. So these will compound till the date of your retirement. So this is a sort of gratuity, or you can call this a post-employment benefit. Very good. Now, a post-employment benefit can either be a defined benefit obligation or a defined contribution obligation, or a defined contribution plan. It can be, right? So, examiner says employee accrue 1% of the final salary payable each year on retirement for every year worked, but those still employed at 31st December exit will receive an improved accrual rate of 1.5% of the final salary in respect of the prior year's worked. Now, can anybody tell me what exactly is this? Can anybody tell me what exactly this is? And somebody actually commented about it. Guys, this is plan amendment. This is plan amendment. Remember plan amendment? Plan amendment is when there is a change, in the benefits payable under the plan. Now, have we increased the benefits payable under the plan or decreased the benefits payable under the plan? We have increased the benefits payable under the plan. So historically, all employees would have accrued 1% of their salary, but at the date of retirement, we are going to provide them gratuity or funds based on as if they contributed 1.5% of their salary. So we have just promised them better outcomes. Definitely, it is a defined benefit plan, and we have increased the benefits payable under the plan. Payable under the plan. Do you guys remember? Plan amendment causes what? This is a past service cost. And what should be the accounting entry for this increase in past service cost? There will be P&L debit and PVDBO credit, as someone pointed out a while ago, but for the wrong portion. Is it clear? Is it clear for everybody, guys? To me, to be very honest, if this type of a question comes into your exam, 9 marks here, very easy 8 marks here, and decent 8 marks here. You see, everybody could have concluded that depreciation should not have been stopped. So at least some marks you should have retained from there. The point that I'm trying to make is, if you go into your exam well prepared, I understand it's a very lengthy paper. It takes time for you to adjust towards it. It takes a lot of effort for preparing for this exam. But at the end of the day, I can assure you, when you go into your exam, and even if you are decently prepared, even then you will be scoring good in that exam, in this particular exam. Now, please give me your honest opinion. Was this question actually doable if you were in your examination? I would say yes. Maybe for some people, you can say, okay, I might have missed out some points, which you specifically mentioned, but then it's fine. You see, even if you score 80 marks, I'll accept you. Yeah. One thing that I would specifically like to point out is that please make sure that when you will be attempting SBR's paper, please be mindful that you need to manage your time. Because time management, if done appropriately, these type of questions always come in section B, and you will be able to gain very good marks. All right. So again, I would be expecting everybody to answer this on the LMS. Now, this question has been uploaded on your LMS as well. Unfortunately, the last time, for some people, I have checked their answers, but for, there is a technical glitch in the LMS, and not every answer I was able to mark. So for this question, I would request that you go onto your LMS, look at the question, start drafting an answer right here, right now. And once you are done with drafting the answer, just copy paste that answer in a Word file and send it to me personally. And please, when you send me that Word file, please write your name and maybe your number over it. So when I revert with your feedback, it's easier for me to identify whose answer actually I have to send. So please do this favor to me. We'll be marking your tests, but please send that to me personally on the WhatsApp. Inshallah, I'll try to revert to you as soon as possible. All right. And again, this test can only be attempted till Sunday. If you go beyond that, don't worry, wait for the next test. All right. So this is the test series going on. Maybe I'll see you next week as well. So high hopes, guys. Just keep on working hard. You can do this. You are out of the many people who are going to, inshallah, do it very successfully. I have full faith on you. You were very attentive in today's session. Thank you very much for joining in. Inshallah ta'ala, I wish you all the very best. And I hope you write a very good answer that I can, I don't put the effort of, critically checking your answer. I hope your answer is that way. All right. So take care, guys. Thank you very much. Allah Hafiz.